Welcome to the Upside Journal podcast. In 2026, domestic venture capital is struggling with extended exit timelines and dry powder gridlock. Yet, a sophisticated layer of cross-border diaspora business networks is quietly unlocking predictable, counter-cyclical returns in AI and climate tech. Today, we're breaking down the hidden alpha traditional funds are missing. So here's the roadmap for today's explainer. First, we'll diagnose the macro problem with the VC paradox of 2026. Then, we'll dive into asymmetric information and talent verification. Third, we'll explore the climate tech supply chain edge. And finally, we'll map out a repeatable flywheel framework. Let's get right into it. Section 1. The VC paradox of 2026, navigating gridlock. Right now, we are seeing a really stark contrast in the macro environment. On one side, you've got the sluggishness of traditional management, right? Funds and operators are just totally bogged down by extended exit timelines and this massive capital gridlock. But look at the alternative. You have the incredible agility of cross-border diaspora networks that are quietly generating true counter-cyclical returns. Bloomberg data actually proves this out. When you pair visionary long-term investments with tight, clinical operational cost controls, you weather macroeconomic downturns far better than pure-play innovators or traditional operators. And this is exactly why traditional managers are falling behind. They get caught in these dual traps. They either suffer from visionary paralysis, meaning they have these great ideas but absolutely zero execution, or they fall into short-termism, where they're so stuck in the weeds they completely miss the massive market shifts. True agility, that requires immense execution grit. It means cleanly separating your day-to-day execution from your long-term positioning. Because if you misapply either leadership style in a high-growth environment, your momentum is going to completely stall out. Section 2. Asymmetric information and talent verification, the leadership duality. So let's get into the crucial point here. Understanding the specific duality you need to actively de-risk your investments today. We really have to define our terms clinically. Operational leadership is fundamentally about internal efficiency. It's hyper-focused on immediate deliverables, quarter-by-quarter throughput, margins, and intense crisis resolution. Think of it like keeping a high-volume payment system online or navigating a really strict regulatory compliance push. Strategic leadership, on the flip side, is entirely focused on external market positioning and macro shifts to secure that real generational impact. We're talking about mapping the long-horizon impacts of global AI shifts or leveraging those cross-border networks for continental expansion. You absolutely must balance both if you want to survive. So how exactly does this duality build into the artificial intelligence era? Well, if we look at the UCL School of Management's cognitive governance framework, it's pretty revealing. Strategic leaders tend to lean on generative and exploratory AI postures. They're using AI to map out complex competitive landscapes and perform sense-making in highly ambiguous situations. Operational leaders, meanwhile, deploy critical and operating postures. They're using AI more as an intellectual sparring partner, rigorously stress-testing business cases and translating those high-level strategies into actual executable workflows.
And there is a vital truth here that we can't ignore. Organizational adaptability and true execution grit now rely heavily on preserving cognitive agency. As AI models become incredibly competent, the defining executive capability is knowing exactly when reasoning should be AI model-led versus human-led. Think about it. If an operational leader blindly accepts an AI-generated strategic narrative without pushing it through a human-led analytical critical posture, the whole organization suffers from framing lock-in. You absolutely have to preserve your authorship of the reasoning process.
Section 3. The climate tech supply chain edge, resilient B2B infrastructure. Now we move to the mechanical execution phase. It helps to think of this balance in two distinct parts. First, you have micro-level throughput. This is the operational leader handling extreme high-pressure internal scaling just to ensure basic reliability. Second, you have the macro supply chain. This is the strategic leader adapting the entire organization to shifting tech adoption cycles and massive global policies like the EU AI Act. This specific leadership duality is totally non-negotiable for building resilient B2B infrastructure, and this is particularly true in emerging economies, where, honestly, businesses often have to build the infrastructure themselves just to survive. And here is exactly how that balance ensures survival. Raw execution grit stabilizes the supply chain and pushes the company through complex regulatory compliance during volatile growth phases. Simultaneously, strategic foresight leverages those high-trust cross-border networks to enable continental expansion. It's a delicate balance. If you focus solely on operations, you're going to be blindsided by policy shifts. But if you focus only on strategy, your day-to-day transaction reliability is going to collapse. Expertly balancing the two is exactly what gives these companies their hidden edge.
Section 4.
The repeatable flywheel framework, delivering valuation multiples. So, how do we actually put all this into practice? Let's unpack the actionable playbook for ensuring your organization avoids the stagnation that's so typical of consolidating markets, what's often called the oligopoly illusion. This operator playbook involves 4 distinct phases. First, strict role clarity. Second, OKR-linked target setting, which explicitly bridges those high-level strategic goals with granular operational targets. Third, regular, rigorous strategy reviews. And fourth, deliberate organizational design. Bridging these 2 leadership styles through this structured framework is exactly what generates higher valuation multiples and much deeper corporate resilience. There's actually some fascinating field evidence to back this up. One FMCG chief executive officer recently noted that every function now starts with AI, and frankly, the teams deeply trust the outputs. Now, this completely validates the massive institutional trust we're seeing in AI workflows. But it's also a bit of a warning, right? These hybrid models succeed only via deliberate human-led organizational design and strict verification discipline. Without that discipline, you inevitably drift into complacency. Which naturally leads us to a non-negotiable question. When you make consequential decisions using AI, who is actually doing the thinking? We're living in an era of commoditized intelligence, where AI produces incredibly accurate outputs in mere seconds. Because of that, cognitive agency and accountability for reasoning are now the absolute rarest capabilities an executive team can possess. Because look, if a major decision fails in 18 months, you cannot simply look at your board and say, well, the model recommended it. So, to summarize our core thesis here, mastery of operational and strategic leadership synergy actively de-risks investments and unlocks countercyclical alpha. Integrating raw operational grit with crystal clear strategic foresight isn't just some organizational luxury anymore. It is literally the only viable way to secure enduring generational impact in volatile, AI-era global markets. You absolutely must be able to maintain the daily engine while simultaneously navigating the macro horizon. Capital has become highly commoditized, but the infrastructure to execute high-trust, cross-border deal flow is rare. To get ahead of these macro signals and access our premium investor network, subscribe to the Upside Journal and join our membership communities. See you in the next Daily Drop.